we say that we will be play in supermarket and LENTA mini proximity format as well. We are currently on the road and opening new supermarkets and mini markets, primarily in Moscow and St. Petersburg, testing their model, and we'll do it to improve our proposition for our clients and to be available for any purposes which they have. We also develop our online business, and we believe that the online now is very important. We have different types of online business. We have partnering with some big retailers such as Sberbank or iGoods to resell our goods from our supermarket. So they use our hypermarkets, the collecting points, and we also develop our own LENTA online business. So our clients could download the app, select product that they which want to get, and just easily request for them. And for our 2025 strategic goals, we set up the following. The first one is the growth. We intend to double our sales to 1 trillion ruble to 2025. But despite their intensified growth, we would like to remain profitable, and we intend to remain the most profitable Russian food retailer. At the moment, our EBITDA margin is higher than 8%, and we intend to maintain it at a decent level.
Good afternoon, everyone. Apologies for being late. I had a small technical problem. My Zoom needed to be updated, and that took a little bit of time. I do apologize.
Hello, Rud.
So, Rud, we just give a brief introduction. Probably I will finish with two other goals, okay, and then we could move forward with you. So our third goal is to be number 1-2 player in the areas where we choose to compete. So it's primarily hypermarkets and probably some others if we decide to go to another niche. And the last one is total shareholder return should be amongst industry leaders, and this is our long-term goal to provide our investors, our shareholders, with decent total shareholder return going forward. Okay, so Rud, would you like to give some updates regarding the current trends we see in the market now and in the second quarter?
Absolutely happy to do that. First half of the year was very much in line with our expectations. We had a relatively good January and February, and then in March we were below same period last year due to the lockdown in 2020, which gave us tailwind in LENTA, and we saw that continue into the second quarter. We in LENTA, we experienced the impact for the pandemic and the lockdown from March through to July, and hence when we're looking at specifically for Q2, we saw negative like-for-like, albeit the total company was growing due to new store openings. We're seeing better and improved numbers in Q3, and more on that in October when we will talk about the Q3 performance. What we saw in 2020 was that the Russian consumer spent more money on in the stores as they couldn't spend in restaurants or on leisure activities. We also saw the Russian consumer starting to visit fewer stores, but leaving a bigger share of their household budget in the stores that they visited. And in LENTA, that meant we saw a significant sales uplift in second half of March and through Q2. It started to normalize in July last year, when the lockdown was eased and other retail sectors and the leisure activities opened up. And hence the comparables for our second quarter was quite tough in 2021, and as I said, we experienced negative like-for-like. Nevertheless, we remain the number one hypermarket operator. Our performance in Q1 and Q2 was above the market average for hypermarkets. In the beginning of last year, we launched our online sales. We have continued to see significant growth in the online channel, and through the second half of last year, we managed to scale our online offer throughout 88 cities in Russia through picking, packing, and shipping from our hypermarket network. That has meant that we have been able to scale the online without any significant investment, simply by utilizing the hypermarket network we have. It also means that versus other players in the market, that we're able online to offer the full 25,000 SKUs that we carry in our hypermarkets, and that under the umbrella of very fast delivery, so down to half an hour from the hypermarket base. What we see in that sense is that the online sales is incremental. It is not cannibalizing the offline sales. And there's a number of reasons for that. One is we've attracted new customers who were not previously customers with LENTA. Secondly, we have reactivated previous LENTA customers who, for whatever reason, stopped coming into LENTA. It could be they moved or something happened which meant they were not visiting LENTA. And those of our customers who were already active LENTA customers started spending more money with LENTA. So overall, in that sense, our online business has required very little capital investment. It's been scaled rapidly. It is to a large degree variable in terms of cost. So we can add resources if we see an increase in demand, and we can remove resources if we see a lower demand in a period of time. And hence we've seen our online grow in the first half of this year to a little bit more than 3% of the total sales, and we continue to see it growing nicely into Q3 as well. What also happened in Q2 was, as part of our strategy towards delivering the 1 trillion rubles of sales, we made two acquisitions. We have said that we want to be an active player in the consolidation of the Russian food retail industry. We believe that because the market, despite some very large players, is still very fragmented, that the market has entered into a new phase. Previously, it was land grabbing or filling white spaces by opening up stores where there were no stores before. Now we believe there's a consolidation going on, partly because we have some large players now who competitively are much stronger than local or regional players, simply because of the purchasing power and the efficiency which you can drive when you have scale in retail. But also because it seems like it was the federal players who had tailwind from the pandemic, and hence there seems to be a number of the local or the regional players who is I'd say under pressure in the market. And we believe in that sense that we offer a good alternative to the other two players in terms of driving and leading the market consolidation. We made two acquisitions: the Bila supermarket chain in the Moscow region in May, and in June we announced the acquisition of the Semya retail chain in Perm. It fits very well with our strategy. We said that in 2025 we want to have 1 trillion ruble in sales, and we want to be a strong player in Russian food retail. We want to be a champion, but we don't define champion as the biggest. In that sense, we are realistic that we will not manage to catch up with X5 and Magnet, but we want to be the best. And we've defined that as being the number one and the number two in the areas where we choose to compete. And when we say we want to move from being a predominantly hypermarket operator to being a multi-format, we are not saying that we expect we're going to end up with 15 or 20,000 small format stores, but where we choose to compete, we want to be number one and number two. And in that sense, the Billa acquisition gave us a strong number two position in the supermarket segment in Moscow, which is the largest and the most affluent market in if you like in Russia. And in Semya, we moved from a number three and number four into a very, very strong number three, and with a small format stores that very well complement the footprint we have in Perm through our existing hypermarkets. And all this should be seen in the context of our strategy, where we're saying we want still to expand our position as the number one hypermarket, but moving into smaller formats in an effort to get closer to our customers, who, when we prepared our new strategy, told us that if we were closer to them, then they would spend a bigger share of the household budget with LENTA. They love our prices, our offer, the quality, the freshness of our products. So by moving closer to them, we expect that we will be able to capture a bigger share of their household budget. And in that sense, we should look at the hypermarket and the small formats as a good complement to each other, with our online offer overlaying that, and ultimately offering through the online the convenience that customers are looking for. And we can do that in what we believe is a very competitive way, as I mentioned before, through offering up to 25,000 SKUs conveniently, which no one else in the market can match. I think that was sort of a brief on Q2 comparable to last year in itself. As I mentioned a couple of times, we are cautiously optimistic on Q3. More will come on that when we release our trading update in the end of October on Q3.
Thank you, Rud. I think we can start the Q&A question.
Sure.
So yes, to ask a question, you can either raise your hand and wait for the timeline to be unmuted, or you can type in the chat and I will read the question. So please do not hesitate to ask questions, because let me remind you that we will finish at 4 p.m. Moscow time. So have 40 minutes left. So maybe I will ask the first question. So as far as I see, you have a robust free cash flow position, and could you please speak up about the dividends guidance update, and especially with the recent M&A deals which you conducted and new strategy execution? Could these two affect the decision of future dividends in the long term?
Very good question. Let me start by saying ultimately it's a decision of our board of directors on whether or not to pay a dividend. So what I say is with a caveat that they ultimately will decide whether or not it is the appropriate thing to pay dividend. Back in March, when we had our Capital Markets Day, we made clear statement about our capital allocation priorities. And in that sense, it is first of all a conservative balance sheet, maintaining a leverage long term not above 1.5. Second is to invest into growth, either through consolidation of the industry or organic expansion. And as a number three, if we do not have any better purpose and can make investments inside the company that satisfy our return requirements, then to pay out excess cash to our shareholders. We have a majority shareholder in Seva Group and Alexei Mordashov, who's been very clear that over time he expects all good companies to pay dividend. The leverage in the beginning of the year was 1.5. We currently are maintaining a leverage between 1.5 and 1.7 in Q2, which is not uncommon because of seasonality. The Simya acquisition we financed entirely through our cash at hand, and the Biller acquisition we financed for the majority of the acquisition as well through our cash at hand. This is a result of a conservative approach over the last 2 years and a significant strengthening of our balance sheet. We believe we have the financial firepower to, first of all, drive the business towards maintaining its long-term leverage goal, have sufficient cash to invest into growth opportunities, and assuming we don't need the cash inside the company to pay dividend, I believe the board will look positively on potential dividend next year, assuming we don't come up with other good opportunities for investing the cash inside of LENTA. But ultimately, it's a decision of the board, and it depends on whether or not future M&A will take place, which can impact it as well as the organic expansion.
Thank you, Rud. And now we have a question from George Paso. You can unmute yourself and ask yourself, please.
Hi, thank you. Congrats on the presentation. Sorry, you said 1 trillion sales in 2025. According to Bloomberg consensus, consensus has 500 million in 2022. So I mean, assuming consensus is right, to achieve 1 trillion, it means active M&A. Just wanted to ask you how much, just to have a sense of your expansion in revenues, will be M&A and how much organic growth.
It's very difficult to give a definite answer to that, for the simple reason that M&A is opportunistic. There are more players in the market who actually take part in the consolidation of the industry. We made 2 acquisitions in Q2. However, one of our peers made a major acquisition in the same quarter as well. So it very much depends on how to say what is available in the market, the pricing in the market, and who is making the best offer for any of these targets. We're confident that we are able to meet or achieve the 1 trillion of sales through a combination of organic and inorganic growth. But I can't give you a specific number of either of those for the simple reason that M&A is opportunistic.
Thank you. And the next question is coming from Vitaly Christianov from Global Alpha. Vitaly, please.
Hi, thank you very much for the presentation. Could you please elaborate on your strategy?
Sorry, Vitaly, I couldn't hear the last part of the question.
Sure. Can you hear me now?
Yes.
Yeah, if you could just give us some color on your store expansion plans in the medium term, like how many stores per year, just to achieve this 1 trillion target. And also, just to follow up to this one, if you could also elaborate on the store unit economics, like what's the payback period, how long does it take to mature, what's the capex per store, just around this subject, please. Thank you.
All right. If we take first in terms of the number of stores to be added, what we said so far is that we believe that we will open up at least 200,000 square meters in 2021. Obviously, with the 2 acquisitions, we're getting close to the 200,000. We will have an incremental above the 200,000 coming from organic store openings. It's too early for me to give you the exact number for 2021 in the sense that we only started executing on our new strategy in Q2, and we're still driving the organic expansion, both in terms of identifying opportunities for organic opening, as well as the exact formats that we want to open on. So being more specific, we'll have to wait until we've gained a little bit more experience in rapid expansion into smaller formats. Again, coming back to the same question as before, that ultimately the roadmap to the 1 trillion of sales will go through a combination of organic expansion and M&A. But since the latter is optimistic, it will be a balance between the opportunities that presents themselves and a continued drive for organic opening. In terms of the capex required to open new stores, again, it's a little bit too early to say. We're still working on the exact model or the format that we want to apply. Needless to say, though, that we have to be competitive. And in order for us to be competitive and achieve the 20% IRR target we have for all store openings, we're going to have to meet or match competition in the market in terms of the cash invested into opening a store.
Thank you for the precise answer, Rud. And dear colleagues, let me remind you that we have 30 minutes left, so do not hesitate to ask questions or write to chat, and I'll read them. So as I see no questions so far, so let me ask a question. So let's speak more about the bill integration, as you already mentioned about the supermarkets, but do you still see solid demand of supermarkets given the rise in e-commerce development and strong competition from the retail segment, which you are also integrating right now in your company?
Yes, we do believe in the supermarket format. There is a store format that meets the shopper mission between what you have in a convenience store with relatively few SKUs and in a hypermarket with 20, 25, 30,000 SKUs. So yes, we do believe in the supermarket format in larger cities. We believe the Billa locations offer a good combination with the existing LENTA footprint in Moscow. There was virtually no overlap in terms of the location. So through the acquisition of Billa, we significantly improve and double our market share in the footprint and double the market share in Moscow. The customer or the Russian consumer continue to demand choice, fresh products, and quality. And if especially you look on the fresh category, so meat, fruit and vegetables, culinary, this is what we can offer through the supermarket format because of the extra square meters, and this is what is driving customers towards the supermarket format. The supermarket format, in that sense, for us, gives us an opportunity also to move the online business even closer to our customer. Because of the very competitive situation in the market on online delivery with very short time, so down to 15 minutes at times, albeit with less SKUs in a hypermarket, in a supermarket, we can still offer the fresh products through picking, packing, and shipping from our supermarket. So in that sense, we are moving closer with our online offer to more customers through the expanded supermarket network that Billa is offering.
Thank you, Rud. And we have more questions from chat. So first we have a question from Olivia Gregg. For LENTA convenience store, what is your competitive advantage versus the likes of Peterochka and Magnit? Are there any acquisitions you consider in this segment, given a huge gap with the largest convenience chains?
Mm-hmm. Okay. We believe that as a hypermarket operator, we have a number of distinct advantages in terms of the convenience store. First of all, we have a significantly larger assortment of fresh products that we can choose from. We have a shorter supply chain in that sense. And since we are expanding with the smaller formats around our existing hypermarkets, we expect we will be able to offer the same freshness of products in convenience as we can do in our hypermarkets. A second advantage is that from the 25,000 SKUs we have in the hypermarket, we have a very good idea of which are the SKUs that the customer prefer. And we have the ability to push those SKUs into our convenience format as well, which we hope will mean that there will be a clear differentiation between the convenience offer that you would find in a LENTA store versus that of competition. And should we find that there's any part of the assortment which is, for whatever reason, not working, we will be able to replace it very fast through the extended offer that we have in our hypermarkets. So if we see that there's a type of spaghetti which is not selling well in convenience, we can, with very short notice, pull it back from the shelves in the convenience, sell it through the hypermarket, and put a new type of spaghetti on the shelves in convenience. We call it the Matryoshka approach, which is basically having the wide assortment in the hypermarket that gives us a deep understanding of the preferred products of our customers, and then through that assortment being able to create the assortment for the supermarket format and for the proximity store, the small format stores. I would not exclude acquisitions in this format as well, but it'll have to be under the same guardrails, if you like, as we've mentioned earlier. Acquisitions have to put us in a situation where we have the opportunity to become the number one or number two in the area that we choose to compete.
So thank you, Rud. And we have one more follow-up question from Jorge Opaso. So Jorge, you can unmute yourself and ask if you want.
Thank you. Yeah, of course. Yeah, I just want to ask you the consensus numbers of growth in top line of 5% in 2021 and 2022. What do you feel about that? If that is reasonable to you, or is it a little bit pessimistic, or just what do you think about that?
Growing 5% in 2021
and 2020, both years, 2021 and 2022.
I definitely expect that we should have an ambition in order for us to get to the 1 trillion in 2025, that our growth CAGR has to be higher than 5%. How it exactly will sit between the individual years is a little bit of a question mark, again, because we are hunting organic locations as well as actively participating in the consolidation of the industry. What we don't plan is that our growth trajectory should be that of a hockey stick. We believe that we need to be aggressive with our growth plans in the near-term years as well. So I would hope that we see a sort of a if not an evenly distributed growth path towards the 2025 target of 1 trillion, then at least that it's not loaded towards the outer years.
Okay, thank you.
Thanks. And next question is coming from Matt Seto. Please, Matt. Could you please unmute yourself, Matt?
Yeah, can you hear me now?
Yep.
Okay, great. So when you think about the bigger shifts in strategy from the old management to the new management, how would you characterize this?
Well, I think if you look at it from that point of view, the old management team, so predating, I guess, myself as well, it was a management team that experience-wise, had grown up in the big format. A significant part of the members of the management team came from international big box retailers, with a very clear focus and a strategy on hypermarkets. I believe today we have a more nuanced composition of our management team, with people that comes with backgrounds from operating smaller formats, supermarkets and hypermarkets. Vladimir Sorokin, our CEO, has a track record from X5 in Per Krostock and from Magnet, most recently before joining LENTA. So I think in that sense, the current management team is one which, on the one hand, has some heritage from the hypermarket segment, but with strong new people joining, who has experience in terms of expanding in smaller formats.
Okay, and then so certainly around Moscow and around Russia generally, just optically the stores from your competitors look just dramatically better than they have been in the past, and not just that, but even in terms of the number of in terms of the initiatives that you're kind of touching on, their offerings have expanded greatly. So whether it's fresh or better variety and so on, so forth. So maybe if you could even elaborate a little bit further on some of your answers in terms of achieving the differentiation, which at least from afar it seems harder and harder.
It is definitely not easy. I'll agree to that. I believe that there's a number of paradigm shifts that is taking place in Russian food retail. Well, one of them is, as I mentioned before, that this land grabbing is changing into consolidation of the industry. A second one is that those that want to be successful in the industry have to show and prove that they are world-class retail operators. And that goes from the assortment you put together and into to the stores, how you procure the assortment, but also how you operationally execute in store. And also the, if you like, the look, the feel, the ambience of the stores. What you see in a number of the new formats or concepts that's been launched by us as pilots and some of our peers is concepts that are getting much closer to what you would find, for instance, in Western Europe or in North America in terms of look and feel. And for me, that's all under the same umbrella, that those that want to be successful in Russia have to prove that we can operate food retail to standards equal to what you find in some of our Western European and North American peers. And it is not easy. It is not easy. I guess I'd say it's a journey that we are all on.
So not to go too far down the road, and but so kind of along those lines, when I see Piotrka stores, they certainly at least from my eyes fit I guess what I would see in Poland or a number of these other countries. Would you disagree, or is the consumer seeing something or desiring something that I'm missing?
I think it depends a little bit where you're looking. I think there's a difference between a small village or a small town and, say, the consumer in Moscow or St. Petersburg, for instance. Mm-hmm. In my view, the customers or the consumers in the bigger cities are much more affluent, not just in terms of their household budget, but also in terms of the expectations that they have for the store in which they shop. I think we still have somewhere to go because of the disposable income, if you like, is still under pressure. Then there's probably a difference between whether you choose with your wallet or whether you choose with your heart. And in that sense, there's a part of our customers who are choosing with the wallet and not necessarily with the heart. But I would still say that over time, and we may still be in early phases of that. The standards to which we need to operate in order to be successful in Russia as a food retailer will need to match those of, again, our Western European and North American peers. But of course, it's something that will happen gradually over time. I believe if you look at some of the recent upgrades in the market from the pilots we launched or from some of our competitors, on a look and feel base, they match what you would find in Western Europe or in North America. Also in terms of, if you like, the whole thinking of the customer journey through the store, etc., where perhaps before there was less emphasis being put on that when opening a store.
Okay, great, thank you.
Thank you. And let me remind me that we have 70 minutes left till the end of conversation. Yes, and we have one more question from Olivia. And you have already mentioned, and I also asked you about dividends and M&A deals, but can you please clarify any update on dividends in light of your recent M&As and your strategy execution, please?
Okay. Yes. As I mentioned, we financed the Semyad deal through the cash position and half of the Bille through our cash position. We continue to focus on first of all maintaining the leverage long term on 1.5 and ensuring then that there's sufficient capital available for organic or inorganic expansion, and then subject to not needing cash for those purposes, it will be paid out as dividend. We reached our long-term target at the end of last year, 1.5. I'm optimistic in the sense that we will be able to maintain that, given what we're currently looking at. So again, subject to M&A being opportunistic. Sorry. Hopefully not too optimistic, but opportunistic. I believe the board of directors will be looking at potential dividend in a positive way next year, but it's subject to what opportunities may present itself in the market. And in that sense, my expectation is that the board will follow the capital allocation priorities we have agreed, which is leverage, growth, and then dividend.
Yes, thank you very much. So we have 15 minutes left, and any more questions, please, dear colleagues? Just raise your hand or text us in the chat. Yes, we have one more question from Matt. Yes, Matt, please.
Hi. So you had mentioned that you want to be number 1 or 2 in each of the areas that you compete in, and then you mentioned, Moscow being one of them. What would be the other areas?
We have initially identified 3 focus areas, if you like. It's Moscow, St. Petersburg, and Novosibirsk. It is, if you like, Moscow, because of the size of the market and the affluence of the customers in Moscow region. It makes it a very attractive market in that sense, and it is still very fragmented. If you look at the players, and hence we believe that there are very attractive growth opportunities in Moscow. St. Petersburg, because it is our home base, if you like, we have a market share of, I think, plus 15% in St. Petersburg. So we have a very strong base, predominantly in hypermarkets, but because we are loved by the customers in St. Petersburg, under this strategy of moving closer to the customers, we believe that there are attractive opportunities in St. Petersburg to grab bigger market share through opening small formats and hence through moving closer to our customers. Equally, we were one of the first of the federal retail players that moved into to Novosibirsk and Siberia, and hence we have a very strong position through our hypermarket network, high recognition from customers, and hence we also believe it is a place where we have good opportunities to grow. It does not mean that we will exclude growing in other areas if the opportunities presents itself. An example is the acquisition of Semya in Perm. But first priorities is Moscow, St. Petersburg, and Novosibirsk. And then under the heading that we want to grow, but respecting the number one and number two positions, if opportunities present themselves elsewhere, we will look positively into that. And Semya and Perm is an example.
And then, so this is, when you think about then, let's just say, because I guess I think of the St. Petersburg and Moscow markets as being very efficient, for lack of a better term, if not crowded. So when you say that there's opportunities, what do you mean by the opportunities within the Moscow and St. Petersburg markets?
Two things. If you look at the Moscow market, modern trade is still not, in its share of the total food retail, is still not comparable to what we find in Western Europe or in North America. St. Petersburg is more saturated in that sense, that modern trade is, I think, 95% of St. Petersburg, but there's still quite a significant share of traditional trade in Moscow, which provides us with an opportunity as a modern trade retailer in terms of taking share from traditional trade. But even within the modern trade share of Moscow, it is relatively fragmented. You would find that the top three players in Moscow, I cannot on top of my head remember the exact number, but within the modern trade segment, probably has less than 35 or 40%, which is very unlike for a market like the Moscow market. If you look into Western Europe or North America, where you typically see the number 2, 3, or sometimes 4 player commanding anything from 50 to 80, 90% of the market. And hence, we believe there are opportunities for consolidation in Moscow, but there are also opportunities for organic expansion.
Okay, great, thank you.
Yes, so no question from audience so far. So another question from me about the convenience stores, the new format of LENTA Mini. Can you please give any performance updates? How many stores are open so far? Can you also remind about the guidance? How many stores are you planning to open? And if there is any operational results like for like, can you please also speak about this?
Okay. We haven't given any guidance in terms of the number of openings. We guide on square meters, simply because of the varying size of these stores. Very often is determined by the space available. Come August, we have opened 29 convenience stores. Performance-wise, overall in line with expectations. What we are still learning is impact of opening closer to some of our hypermarkets, our supermarkets, competitive situation in terms of opening in areas where you find some of our competitors. We are still experimenting with different types of the format. So we haven't settled on a I'll say that the future format in that sense. We want to make sure that we pilot and test sufficiently different ways of doing it, both from an operational point of view, but also from a look and feel point of view, all with the intention to make sure that Mini LENTA is differentiated from other stores in the market. Like for like is too early to say. Our like for like is once the store has been operating for 12 months. What we do see is ramp up of stores opened, which gives us belief in our ability to operate small formats. My expectation would be that we have to get until the end of next year, when, in order for us to get scale in the number of stores, but also for us to have finally settled on what does it mean when we say mini LENTA. And that requires us to get a little bit more experience from the stores we have opened, more feedback from the customers, and also for us to make the necessary adjustments ultimately for us to decide that this is the mini LENTA going forward.
Thanks. And can you please remind about the specifications of the mini format? So what's the size of the store, and how many SKUs are offered?
Very good question. We've had quite some interesting discussions internally on that, because in my view, the classification between a hypermarket and supermarket is not always clear, and the classification between the supermarket and a proximity or convenience store is not always clear. And frankly, I don't think the customer really cares. This is entirely for our purpose. But for us, I'd say when you go from a convenience to a supermarket, is somewhere around the 750-850 square meter store in terms of sales area. But you can have a convenience store down to 300 square meters, which means even within the convenience format, you can have a size of twice a store that twice the size of another one, and that also determines the number of SKUs. I would say in convenience, probably up to around 5,000 for the biggest stores, but it all depends on the individual store, how it's configured. Sometimes when you open stores, it is in existing buildings where the layout is not always optimal, and that also impacts the utilization of the sales area.
Thank you. So correct me if I'm wrong, the average number of SKUs is around 5,000, and the size of store varies like from 70 to 300 meters.
The number of SKUs is up to 5,000.
Up to 5,000. Okay.
At this point in time, I cannot on top of my head remember the average. The convenience stores is from around 300 square meters up until 700 to 850 square meters, depending on the specific layout of a store. If it's a nice square box,
Thanks.
You would see a supermarket starting at 850. If it's not a nice square box, then it can be still a convenience at 700 or 800 square meters.
Perfect. And are you gonna analyze any the traffic of the store? So do you set any technology to see how many people are visiting the stores? Maybe did you do any surveys to ask what's the competitive advantage of LENTA with other convenience stores? So
absolutely, we have a number of metrics that we measure on. We have the traffic into the store, we have the number of checks, we have the average basket size, the number of items in the basket. We actively take feedback from the customers, why they came to LENTA, what they like in LENTA, what they don't like in LENTA. We have an extensive insight through the customer data we have. 95+% of all customers in LENTA use our loyalty card, which means we have unique insight into the composition of our customers, where they shop between the different formats, as well as what they shop with us. So customer feedback and customer insight is a significant part of our small format efforts.
Thank you very much. And we have just around 3 minutes left, so maybe we can take one last question if somebody from audience is willing to ask. Otherwise, I think we can sum up and finish with today's session.
Okay, well, it was a pleasure, and thank you very much for showing the interest, and thank you very much for inviting us to.
Thank you very much.
A little bit an introduction to LENTA.
Thank you, Rud, Timothy,
Just a
and
reminder,
Tatyana.
Yeah,
October-
thank you.
Take care.
October 25th, we have publication.
All right, thanks.